Hi everyone, welcome to Bond Bytes, the daily bond market highlights from INRBonds. I'm Arjun Parksarthi. Sensex close to 60K, record highs, a psychological mark. The Fed is primarily a huge cause for this equity rally. The Fed yesterday said that they are looking to taper off bond purchases, signaling that they are very, very comfortable with the way the economy is showing signs of traction in the US. And globally, too, economies are looking to pick up, and that is showing up in equity prices. With the Fed has also said the Fed members are like slightly divided on the timing of rate hikes. That is, record rates are at record lows. But would they start to hike rates next year or wait for one more year before they hike rates? But having said that, whatever happens, even if the markets falls and there's more issues of COVID, the Fed will get back to an ultra loose monetary policy. So asset markets are now factoring in that central banks can never ever reverse policy sharply. And if anything happens, they'll again go back to their ultra loose accommodative policy. And this sends out a huge amount of signals to the market, building up asset bubbles. The question is what happens to the markets and what happens to bonds? So as we all know, as bubbles get built, economies show traction, inflation also tends to rise. And we know that now inflation in the US is trending very high. In India too, it's higher, trending high. Commodity prices are at record highs. You have then asset markets showing huge amounts of upticks. So that increases wealth effect. Real estate markets globally has improved. US it's at record highs, so there's a lot of spending happening at the consumer level, and wage inflation is rising across, and all that will feed into inflation. And normally, when inflation rises, bond yields also tend to rise. But now, central banks like the Fed and even the RBI are saying that even if inflation rises, it will not rise as much as expected, and it will tend to come down. So clearly, I think the central banks are pushing up asset prices, but the question mark is the bonds. So if bonds will start to worry about inflation and the markets completely sell off bonds across the globe, and so will that lead to a break in the bubble that is being built in asset prices? So we have seen commodity prices rise, equities obviously at record highs. Then you have money flowing into assets like crypto. All this liquidity is feeding into a huge frenzied asset bubble in many asset classes. And the trick could be the form of bond yields rising very sharply. Right at this point of time, it doesn't look like that's going to happen very fast unless all the central banks are completely taken unawares by a very sharp rise in inflation that could shoot up if things go out of control. So you see the chart of the day, you have bond yields trending down and 10 Sensex at record highs from pre-COVID levels. So clearly, we do see that the excess liquidity and low interest rates are feeding into very strong asset prices rise. So will this continue, and will bonds break this asset bubbles that are building up? Remains to be seen, but enjoy the ride at this point of time. Thank you for listening, and don't forget to join our Bond Advisors certification program. We have a 1 month course for basic and 1 month for advanced, and this gives bond advisors, financial advisors, an extremely strong knowledge of bonds and bond markets, and they correlate it to all other asset classes, apart from also increasing the footprint on bonds to their clients. So given that the markets are at record highs, they want to balance out portfolios with bonds. So they could get clients to invest in bonds for asset allocation. And all the bond advisor certificate program is made just for the same. It's a 1 month online course, and at the end of the course, we provide a badge as well as a certificate, and as also a lot of other um, discounts available on our own INR bond membership. And we also have dedicated analysts to provide you support and knowledge on the bond markets and on bond investments as well. The link in the description below will give you the place to enroll for the program. And you can enroll anytime now, as it's a 1 month online course. Thank you for listening in. Don't forget to subscribe to our YouTube channel, and don't forget to visit INRBonds Quick Invest to invest in the best bonds, the best price, most transparency and information in the market available. Thank you very much.